Hey investors, it's Chris Vermeulen from thetechnicaltraders.com. I want to give you a big picture view of where gold, silver, and platinum, the patterns that they're in, where I think they're headed, and kind of the time frames to start to look for some of these price patterns to unfold. Now, I want to give you a quick walkthrough from a technical standpoint. I'm a pure technical analyst. I'm going to show you kind of some chart patterns that play out and kind of one that's kind of repeating. Now, patterns, they can play out repeatedly over and over again. Sometimes patterns take 20 years to play out, other times they can take just a few months, but the patterns all have the same characteristics. And I'm going to kind of walk you through. Gold is really the gold standard. It's the nice clean chart. And as you notice, we'll drop down to the more volatile assets. You go to silver, you go to platinum, charts become noisier, a little harder to predict. They have more potential. But I like to use gold as the gauge to figure out where the overall trend is, the bias of the market, and then you can look at these other metals as which one you want to get into or a basket of them as an investment going forward. So taking a look at the price action here, let's take a look strictly at the monthly chart of gold here. Now this is going back all the way to the 80s. And you can see here we had a big bull market, a big blow off top. Market pulled back, consolidated, and then it went dormant for a long time and this is what commodities like to do. They can go dormant for 5, 10, 15 years and really just lose all favor. No one really wants them anymore. They all give up on them. And when people give up, the masses, that's usually when a new bull market starts to emerge. Now, if you were to just look at this chart, if I was to take the date away and I was just to pull up this time, you would think this was like 2011, 2012. Most likely for gold, and then of course it went dormant. Now what we're looking at here is we want to see when the market starts to work itself out of this base. Usually you want to break some previous highs. If we were to draw a couple lines across here, these are kind of the significant levels on the chart where gold back then started to rally up, and then it finally started to break a very significant high over here, and it started to build some traction. Lots of volume started to pile in, and then finally when we broke these two very significant previous highs, that's when gold really broke out and we saw huge money move in. It ended up rallying up, having a pause and a pullback as it got into this previous high level, and then it ate right through that overhead resistance and exploded to the upside and made new highs, and then had a big pullback. Now this is a very, very typical pattern. Usually you have a bull market and then you've got a flagging or a basing formation, and eventually it'll break out of that base and continue to go higher. Now if you look at this overall pattern and I fast forward to where we are today in gold, you can see a very similar pattern. Let's just fast forward here where we've got gold was in a bull market 2011, 2012. It sold off, it traded sideways for years. If we draw the line in the sand here, where this basing formation more or less went dormant and then eventually turned positive, you can see you got this big run in gold where everyone piled in. We saw big volume move in, people investing in gold. It's starting a new major bull market. And then it kind of came up and traded up near kind of these levels here, eventually had some volatility with COVID here, but it broke out to new highs and is having that pullback. And this is the same pattern and setup that we saw way back over here. Let me just draw on this chart. You can see this pullback where I showed you originally is very similar to this type of pullback where we are right now, where the market pushes up to minor new highs and then it has a strong pullback. And this is the start of a new major leg higher. You can see how gold continued to have this massive rally after that. And that's kind of where we are now. We broke out into a bull market, pushed to new highs, having a first real significant pullback after hitting new highs. And then now we're looking for some traction in gold going forward. And there's a lot of upside potential here. Now, if I was to just pull up the US dollar index chart real quick, you can see 2006 where it put in a top and then went and sold off. That's when we had that huge run in gold to the upside. Now, if we were to just draw a line across the sand here through this chart, we are kind of back to this very critical pivot level in the US dollar. Now, if the dollar starts to break down here and goes below 90, it could very easily unwind down to 80, 75, potentially even 70, and that would spark the next major run in precious metals. Until it does that, I think the metals are still going to continue to chop around and struggle, but this is a very significant pivot point on the dollar chart where when price is above it, the gold metals struggle. As it's below it and moving lower, we see huge moves in precious metal prices. So we're kind of at this really very similar junction, this turning point on the dollar and the turning point on gold itself. So if we were to just look at this overall pattern, we can now use some tools to get a gauge of where gold should pull back and then where it should rally to next. And I use Fibonacci retracements and Fibonacci extensions for this price. Let's go and use a Fibonacci retracement. And what this is doing is telling us where price momentum based on the overall patterns and the momentum of the price, when it rallies up, how far should it pull back? Where's the sweet spot for price to pull back to in terms of gold? And you can see here from this low, we saw gold rally up, turned into a new bull market, came all the way up, and hit new highs, and then it had its first real significant pullback. And this, you can't see the number, it's a little hidden here. I can move it over a bit. It's the 0.38 down to a 0.5, which is a 50% retracement. So from the low all the way up, it's going to pull back 0.38%, or it's going to pull back almost 50% of that move. And that's usually the sweet spot. That's the area where we're kind of looking for anything that we're looking to enter in to find support in that kind of sweet spot on the chart. And then from there, you can see it continued to go a lot higher. Now, if we throw a Fibonacci extension, an extension is going to tell us, based on this first move up and this first pullback, where the next upside target should be based on momentum. So we're just going to go from the low up to this high, and we're going to pick this low right through here, and we carry it over, and it tells us we should see gold when it breaks to the upside here. It should run up to this 1. That means 100% measured move, and you can see it ran all the way up to the 618. And I should mention that when you hit the 618, if there's a pause or pullback at the 618, you almost always go up and hit that 100% measured move. It's just, these are two really critical lines on the chart, levels of momentum, that if one is hit and there's a pause and pullback, a little hiccup on the chart, typically you're going to work yourself up to that 100% measured move. And that's what gold did. And typically near the end of a move, whether it's to the upside or the downside, you usually see some type of blow off pattern, meaning everyone piles in, the media gets in, you see a huge explosive move. You never know how high it's going to go. And then eventually it's going to put in a real high volatility topping pattern, and then eventually break down and then fizzle out of favor until people give up on it. So that's what we saw with the last bull market breakout in gold. Now, if we were to fast forward to where we are today, we've had this multi-year consolidation. It broke out, it hit new highs, and we're having this pullback. Now, where are we going to be looking for support in gold? We're going to use the Fibonacci retracement. We can go from a couple different levels. We'll go from the low here, and we're going to go up to the high and carry that forward. We are looking for that sweet spot between 0.38 and the 0.5. This level right here. So gold is getting down into this real sweet spot in terms of where it should find support. Now we can also use another one, a little more conservative one here as well. We can go here, carry that forward, and that gives us a bit different of a level, a little bit higher actually. It's actually going to be in this level right here. And that's based off a more recent low where gold really made its first higher low and then ripped to the upside for a new uptrend. Grand scheme of things, this bigger box encountering both of those levels are bringing us down to around that 1560 or 1560 area to where it is right now. So we're in this kind of sharp pullback, this kind of washout phase, people getting shaken out of gold, just like we saw over here. And then eventually we should see this start to rally and go higher. And the big question is, how high is it going to go? And of course, we can figure that out using Fibonacci extensions. I'm just going to move a couple of these. If we use a Fibonacci extension, we can go from this low to this high, and then down to Well, right now we've got a low right through here. We'll just go down right into the middle between 50 and 3.8 in case it goes back a bit more. We can go conservative and go right down to the 50% retracement level if we see gold pull back a little bit more. And you can see how the upside target here is $2,623 an ounce. So gold has the potential to rally up, hopefully hit 618, has a little bit of a pause pullback, then we should see this 100% measured move hit, and that's the next major target for gold. And if we look at the pattern here of how many years it took to kind of build this base out, you could argue there's a 1, 2, 3, 4, so we could say 3 or 4 years to kind of start this first leg up in this bull flag. So we're looking at potentially another 2 to 3 years going forward for it to get up to 26. Now, you never know how quickly something is going to rally. We just want to know where these target levels are. We want to know where key investment support levels. We're at a point here where investing, I think, in physical bullion, gold, silver, platinum is a good spot in general. Long term, it's had a very nice pullback. If you look at how much gold has pulled back, it's down about 17%. You could argue almost 20% to the lows there. So you're getting it at a nice discount. Started a new bull market. It's pulling back, which is very bullish, and the upside potential here is quite dramatic. Another $1,000 an ounce from where it is right now. So that's kind of the view for gold. Gold's got very nice, clean charts. It's kind of the more stable precious metals. Investors around the world invest in it. You kind of can see momentum of investors getting excited, investors getting greedy, and then it fizzles out, and then it falls out of favor, and then the cycle rinses and repeats. So that's kind of where we are in the precious metals cycle. Now, if we were to take a look over at silver, you're going to realize it's a little more violent of a chart. And let's just zoom into the more recent price action here. We've got this key resistance level on silver. We got a couple different levels here. There's one here, there's one up at this high, and then of course we're going to have a couple levels right through here as well where we had price come down and kind of trade through here. You could even throw one in here. But overall, you can see we've gone to this multi-year basing formation where it falls out of favor, and then suddenly we start to break. Each one of these blue lines is a previous pivot high, and as you start to break one, it creates people covering their short positions. They want to get out of silver. They don't want to be shorted anymore, and it creates a wave of buying. And then you see them also invest in it, and they want to own it because it's starting a new uptrend. And so typically, if there's a bunch of blue lines layered together, it's usually a huge wave of buying that drives price up and changes the momentum from being down to now it's moving up, and now it's kind of consolidating in this sideways pattern. And so now we're looking for silver to try to build a base and a platform, and it's going to move very similar timing to gold. Eventually we should start to see this move to the upside. Now we can throw a Fibonacci extension or a retracement on here, get an idea of where this pullback should be. And as you can see, it's come down to this 3.38, and we're kind of dipping down between and towards this 50% retracement level. So it's had a really nice pullback. It's actually holding up very nicely. This is a bull flag pattern where it rallies up and it consolidates through here, and it should resolve to the upside and start to head higher. And where is that upside target? Well, we can use Fibonacci extensions to get that movement. We'll go from here to here and down to this low and carry it forward. We're looking for silver to run somewhere up to about $40 an ounce as the next 100% measured move, which brings us back pretty close into this blow off top where everyone piled in, chased price up, sold and crashed back down, put in a top, and then fell out of favor. So that's kind of where we are. If you look at silver in terms of percentage wise from where we are today, silver's got around a 60% gain to the upside based on this chart pattern. Again, I think this could take 1 or 2 years to mature out. This is the monthly chart, so every 12 bars is 1 year. If we take a look over at the gold chart, let's just so you can get an idea for percentage gain. Gold has the percentage gain potential of roughly 50% so silver's 60, gold is 50. Now let's take a look over at platinum. Not too many people are interested in platinum. It's been really dormant, and platinum used to be worth a premium, much more than gold, and it really lost its favor, and it's really struggling to try to grab some traction and become favored again. It had a multi-year basing formation, eventually had a huge rally and completely collapsed in the 2008 crisis and rebounded, and it's really a much noisier chart. But let's just zoom into the more recent price action and see where these levels are for platinum. Now we got this pretty clear line in the sand. It's around this 1,050 mark. Many times it got close and sold off, and finally just really in November of last year, December, we started to see this break out of this multi-year basing formation, and it's pushed up and it's hit, it broke this high. So a nice significant pullback or rally, and now it's having a bit of a pause. Now this one we haven't had as much of a pullback yet. We aren't seeing a big pullback in terms of where price is taking a breather. There's still a lot of potential for platinum to pull all the way back down to around this 1,050, potentially dip down into $950, somewhere in this range, before it potentially takes off. Now we'll see where it goes. If precious metals do continue to rally, this could just be a little sidestep here, and we could see this really start to extend. But you're going to notice as you move away from looking at gold as an investment, the gold chart, as you move away from gold, the charts of different metals become a lot more random, a lot harder to kind of gauge and get a feel that they're not quite as clean, but they do have a lot of potential in terms of performance. Silver will outperform gold, and these are very conservative measured moves that I'm talking about. We could see gold and silver and potentially platinum go a lot further, but this is just based on technical analysis, time cycles of how long and where something should go. And typically when you hit that 100% measured move for a lot of these assets, you're going to see it go a lot further beyond there, but usually for a very short period of time. It's usually when everyone is in a euphoric stage, everyone's buying metals hand over fist, and it creates this kind of explosive top, and then you'll see the price reverse. So platinum doesn't give us a whole lot of insight as to where it's going to go. It's had its first kind of run up here. It hasn't given us a pullback yet, so it's a little bit behind the ball, I think, in terms of silver and gold, and we really need to let this mature out. But overall, silver could continue to run higher and then put in some type of pullback going forward. Silver is definitely the newest metal. It broke into a new bull market in December. It broke this blue line, so it is just starting a new bull market. It could continue to rally before it has some big pullback and then goes higher. But overall, is definitely the freshest setup in terms of precious metals. If you don't have platinum, owning a little platinum is definitely a nice little twist. You never know which precious metal is going to go absolutely ballistic. You never know if it's going to be gold, platinum, palladium, silver, whatever. So having a little basket of them is pretty important, I think, in terms of a well-balanced portfolio. Anyways, hopefully that gives you some insight of the kind of long-term views of gold, silver, and platinum, and take care. Bye-bye.